Andrew, first of all, talk to me about these Australian numbers and also what you're expecting from the RBA later on today.
Look, the numbers are a surprise to us. It shows good growth in that industry. However, what we expect from the RBA is probably a less bullish tone than what they would normally have. Generally, they are very bullish on the Australian economy, but given the amount of bad news around the world, I think their tone might change significantly in the statement today. We don't expect a rate change. However, we do expect the tone of the announcement to be slightly different, and in that case, I think we will see further weakness for the Australian dollar.
Well, okay, for the weakness of the Australian dollar, we're looking at the Aussie trading below 95 cents now, so it's weakening by 0.25% despite the economic figures that beat expectations. What are the depths for the Australian currency? Can we hit 90?
Look, I think we've set a price target of below 90 cents in the next 2 months. I think the Australian currency is particularly exposed to the Chinese economy and growth in China. What we're seeing is increasing issues with the Chinese lending sector in terms of shadow banking and private lending. We're also seeing increasing issues related to corporate irregularities and accounting irregularities, and also outright fraud in China in relation to some of the listings in the United States, and that is having a very negative impact on the outlook for Asia in general and the outlook for China. We've also seen slowing manufacturing out of China for the last 3 months. We've seen contraction. We're also seeing commodity prices fall. Now, all these things create a perfect storm for the Australian dollar to fall further.
Okay, Andrew, I don't want to go on a different tangent here, but you said outright fraud in China. What makes you think that that's actually happening?
Look, we're seeing various listings in the United States from Chinese IPOs that were sponsored by various banks and accounting firms in the United States that are beginning to disappear. Essentially, what we're seeing is companies that are saying that they are doing one thing when in fact they're not doing anything of the sort, and investors are punishing these stocks. Now, I won't mention any names, but I think it's in the market, and it's very clear that there are a lot of accounting issues with Chinese corporates, issues with their lending, and also issues with corporate governance, which the Chinese government must address.
Okay, well, it sounds like you're pretty bearish on China. Okay, let's also talk about the euro, because it hit a decade low against the yen. We're looking at it declining to a 1-year low, or close to a 1-year low, versus the U.S. dollar. So the guess is, how low can this common currency go?
Well, the common currency has been lower before. Its average is a lot lower than where it is. I think that the impact of increasing popular dissent in the eurozone in relation to support for bailout packages from the people in Greece and from the people in France and Germany in particular, and also the fact that you don't have a united leadership as you do in the United States. You've got a disparate group of nations trying to fix a problem that is a huge issue. Essentially, you have too many doctors and no clear path as to what the medicine should be, and what we'll see is further weakening in the euro. The good news is that this fall in the euro-yen to decade lows is very good news for Germany, clearly because it increases its manufacturing competitiveness against Japan. So I think an unintended benefit of this weak euro is that exports will grow out of Germany, and that we'll see
Andrew,
further
give me some
weakness
levels,
in Japan.
though, for the euro. I mean, how much lower can it get for the rest of this year?
Look, our two-month target on the euro is 1.25, so we're looking at a further 700 point fall in the next few months.
Okay, one more question for you, Andrew. Best bet in the currency space, is it just about buying outright dollars right now?
Absolutely. That's what we've been doing for the last 2 or 3 months, and we continue to buy dollars against all currencies except for dollar yen.